back.
Good morning, my friend. How are you today?
Great. Monday morning.
Are you great on Monday at 6:30? I love that.
It's all right. It's raining out.
See, you're already hedging.
Yeah, it's all right. It could be better.
You're already hedging.
But I'm here with you. It's Cinco de Mayo. We're having. I guess it makes sense. We had Velvet Taco on Friday, which was.
Hey, when you get the choice of squirrel, possum, and what was the other one?
I don't know.
Okay,
there was a tiki masala taco, which tastes good but sounds
right, which is an exotic upper.
It's weird.
UP Michigan squirrel.
Yeah, I don't know where they source the meat. Velvet Taco, I don't think is necessarily farm to
table. Did not do the Velvet Taco. Couldn't get it down my gullet.
It was not great, and I guess it's making sense because I was like, man, and now we're doing a taco bar today on Monday. Traditionally, we do Taco Tuesday, but I guess this is the Cinco de Mayo
taco
celebration. But happy Cinco de Mayo to people who are actually celebrating. Did I have a good weekend?
Which
it was
Tom
actually
Cruise
pretty
movie
great.
did you watch?
Watched Top Gun Maverick last night.
Oh, look at you!
So boring. What's with that movie?
The second one?
Yeah.
The supporting characters aren't that good.
It was. I didn't really like the mustache guy. The mustache guy didn't really do it for me.
Yeah. Kind of.
It wasn't that interesting.
Yeah.
I thought the planes were super cool.
Yeah.
The planes went really fast. That's for sure. Mach 10.3. How many Machs have you gone?
I haven't gone to Mach yet.
Okay, because Pete in his free time flies planes.
Right, but
what is a Mach? I don't even know.
That's the speed of sound.
Okay.
So it can vary depending on air temperature and air density, anywhere from I believe 700 to 775 miles an hour
per Mach.
Per Mach. So Mach 2 would be 1,400 miles per hour.
That can't be possible.
Then I'm wrong.
So when he goes Mach 10, he's going 7,000 miles per hour.
That would be in the thing at the
start of the movie. Yeah.
Yes.
That's crazy.
Yes.
Wow.
Because you see them go flying around the, I want to say the Apollo missions when they orbited the Earth, orbited it at 18,000 feet per second was their velocity.
That sounds pretty fast.
Yeah, you would think, huh? Even for you.
Wow, that's crazy.
Yeah.
It was pretty good, but it was, I don't know.
It was 18,000 feet per minute. Sorry.
It was a little. I don't know if schmaltzy is the right word. It was like
it was long. Let's not get around. It was long. He was going to miss. The bombs were going to miss. I mean, you knew the bombs weren't going to miss.
But I guess at least in Mission Impossible, we don't even like pretend that he's like got a romantic interest or like, oh, here's like a 10-minute scene. The Val Kilmer thing, I understand that he was, sick at the time and all of this stuff. And it's a nice scene that they got him into the movie and everything else, even though he couldn't talk. But it's like that's like a 10-minute scene of like, where are the planes? I thought we were supposed to be in planes this whole time.
What can I tell you? It's just considering how long they took to make it. It definitely.
It was good. It was good.
Again, if you set your expectations right, yeah. But all those young guys were just not that. Compelling.
I wasn't. They definitely like half developed them. Like the first half of the movie, you think like, oh, I'm going to care about these guys, and then then like Tom Cruise just does the mission,
right?
And it's like, okay, I guess I don't really care. The only funny part was when he saves the guy at the end, and then like he gets shot down, and he's like in the snow, like in the middle of nowhere. You're both wrong about Top Gun Maverick. It's awesome. Oh, from James is mad out there. It was probably, if you saw it in theaters when it came out, maybe it was like a bigger. I remember it was a huge deal when it came out, and people were really talking about it. But me watching it on, although it's a 70-inch TV, yeah.
Well, it didn't do it for you. You're going back to Ghost Protocol.
I'm going back to. It's funny. It ended, and then Callie started doing whatever.
It's amazing how, because I watched Days of Thunder, just like the last 20 minutes of it.
I don't know what that is.
That's a Tom Cruise race car movie. It's Top Gun and NASCAR. It's the exact same thing.
Okay. Days of Thunder. Oh, from 1990. Wow. Yeah, maybe I'll watch this. Robert Duvall.
Yeah.
Nicole Kidman.
Who's,
Wait,
Robert Duvall's great at it.
was he dating Nicole?
He
Kidman
was married
at the
to her
time?
at that time.
Married, yeah.
Yeah.
So this must have been
This is
before Eyes Wide
exactly
Shut.
right after Top Gun. This is basically Top Gun with NASCAR.
But anyways, it ends,
That's creepy.
and then Eyes Wide Shut is late '90s, and then they
creepy.
separate. It ends, and Callie she goes off to do whatever. I don't know what she's doing, and then like I'm looking at my phone, doing something, checking email, whatever. And she comes back, and I hadn't noticed that on whatever streaming service we're watching Maverick on, they just started Mission Impossible Dead Reckoning, the most recent one that you can't get through. And so she comes back,
and she wants to watch it.
and I'm watching the submarine scene again.
That was
and
the
she's
best scene
like,
in the movie. The
"You're
first
watching."
10 minutes of the movie were really good. After that,
It's
completely
cool,
lost.
but she's like, "You're watching this again." I can't believe it. And I was like, I didn't even put it on. I didn't put it on.
No, where you should have been over at my house helping me out.
With what?
Michelle and I go to. We had this fountain in the back of our yard, and this was 10 years old. It cracked
nice
and stuff
fountain.
like that. Yeah, but it cracked. So they had garbage cleanup this weekend. Wanted the village will haul away anything for free. So we went to get a new one at this landscape supply place, and
Oh, so you abandoned it? I thought you were going to try to fix it.
I tried, but every time I tried gluing a piece, another one would just crack. So it was like, this isn't going to work. I really thought I was going to be able to get another season out of it. So we go and we're looking at different ones, and they've got these really cool ones like big orbs where the water comes off of them. And then we found this other one that looked great. The guy goes, well, you can take this one. I said, well, do you have a new one? I don't want one that's been sitting outside. He goes, yeah, give me an hour and I'll get it uncrated. And I come back, and the guys are loading it into my car with a freaking forklift.
Mm-hmm.
And I'm like, can't we just pick it up? And they go, oh, no, man. The base alone weighs 175 pounds. So it's
How do you do this
I don't
stuff?
know how I did it, because I asked them how much to deliver, and they go $69. I was like, I'll just come back and pick it up rather than having them deliver it. So I get this thing in my car. There's two pieces. One weighs like 150 pounds, the other like 100 that sits on top of it. And trying to get them out of my car,
How could you even do it?
I ended up kind of MacGyvering it. I put a furniture blanket and put a wheelbarrow, so I slid it from the car into the wheelbarrow, and I wheelbarrowed it around back. But I could have used some help, because I was like driving around. You know, it's 3:00 in the afternoon on Sunday, hoping there's some lawn crew somewhere who could, hey, dude, you want to make a quick 50? Give me a hand. Nobody to be had.
It couldn't be more than 70 though. If the delivery was 70, it's got to be. You've got to make some money.
At that point, I would have paid more
Yeah.
than $70. It was just, I've done this before where I just don't ask, because it looks like they have these huge ones. I'm like, well, this one can't be that big.
Yeah.
Wrong. So that was
Well,
exciting.
hopefully with that weight, the integrity of this fountain it doesn't crack. Hopefully.
We'll see. It'll be interesting to see.
If you need help, I don't know how like, what are we, like ancient Egyptians? I'm going to start like carrying freaking big slabs of stone around. How the hell are we going to figure this out?
You're going to put them on those logs and wheel them towards the back.
Not what I studied at Michigan. Studied a lot of, according to you,
You
strange things.
You never got
but-
into the advanced degree programs.
Yeah,
like
carrying
heavy thing movements.
stone fountains around. Well, I hope it works out. I'm sure it's beautiful. Market actually relatively active for some holidays in the UK. Is that what you said?
Bank holiday, yeah.
Holiday in the UK, so a little light on the volume side of things if you were looking at futures and some other things with that major market out, but plenty of action to kick off the week. Some US dollar selling, it looks here, Pete, across the board. We're going to get into a little bit of a recap in just a second of the jobs number and what it means for U.S. rates, because I don't know if you checked Friday afternoon, but
They took a lot
out of the rate cut projections. So we'll take a look at that in a second. But when you look at this board, Pete, what is the most surprising to you? I've got something that's most surprising to me, but I want to hear if it's the same with you.
Probably, the Aussie move and the Kiwi move. So, tariff schmariff.
It's craziness with this move.
This is wrapping right around. Kiwi's through its 200-day moving average. It's 100 points above it. Aussie's rubbing up against it, are actually through it, but really not pulling away. But this is exactly what we talked about last week. We're starting the week. If you were short, you're, depending on where you set your metrics, you're out.
I'm going to try to look at this. I'm putting together a moving average for you. Can you believe that? I guess that's the 200-day moving average. I mean, it differs when you're looking at futures, whatever. But yeah, they're through them in some cases, or at least dancing around them. I'm looking here at Aussie, and you can see the moving averages for Aussie right now. Short term, looking at shade under 64. Medium term, around 63.
200-day, 64.20.
And so now we're trading close to 65 for the first time since you go back to November, start of December.
Right, and I consider that whole 65. That 65 pause was on the way down to 62 cents. I mean, I consider it relatively sloppy on the upside. In other words, if you're looking at inflection points that you want to lean against, being a contrarian on this up move, I think it gets to be a little bit harder for you at the start of this week. Why is this railing when U.S. rates are not coming down?
Yeah.
I think there's more at play here.
Mm-hmm. But also, U.S. I guess I didn't look at the global equity story this morning, but risk-off sentiment. It seems like here to start the week.
Very much so. They, that was a pretty solid rally last week. Was it 9 up days in a row in U.S. equities? I want to say 9.
Something crazy, yeah.
And they started. They opened up Sunday night at 5, relatively flat, and then the selling just emerged and accelerated. And what was interesting, and bonds first traded down with it. So it's like, okay, this is the odd thing of bonds down. Now, Friday, the finance minister of Japan just happened to mention, we own 1.3 trillion in U.S. Treasuries. We don't have any plans to sell them, but we just wanted to let you know that during these discussions. Now, why do you mention that unless you want to use that as a little bit of a
negotiating
deal? So, I think we're seeing gold on an absolute rip.
Yeah.
$75, $80 right now. Probably even higher than that last time I took a look. Gold up, copper unchanged, the commodity currencies up. You would think it'll be interesting to see what kind of print we get out of the Chinese stocks today, but I would have to guess things like FXI are going to be a little bit higher. I'm guessing.
We'll see. I didn't check.
But this is a pretty. This is why we talk about number one, two-way management and realistic expectations. You really have to say if we end up anywhere in this range right now, you've got pretty much a new range defined between 64 and maybe 66.5 cents.
Sure.
And we've recovered a lot of ground, but just like on the way down, where it seems so cheap. When we came off of 68.5, this level seemed so cheap.
Sure.
4.5 big figures. I think you've got to be a little bit mindful of getting too aggressive on the short side here or getting too stubborn on the short side that it can't move this fast. What we did was had a really hard shakeout to the downside, and you can argue from this longer-term weekly chart, we're just on the first leg of a normalization journey. Now, that doesn't mean we just go straight up from here.
Of course.
But I think that you've got to be able to, and I always say this, I want to be able to look at both sides of the market. Sure. I don't want to say it's gone too far too fast. I can never buy this. Given an appropriate pullback or a little bit of downward structure, I want to be able to look at both sides of the marketplace.
Especially in the short term.
Yeah.
I mean, we have an FOMC this week. We saw from last week, multiple news stories or economic events come out, even amid however many days in a row it was higher in equities.
Right.
There were both sides to be had.
Yeah.
There were plenty of days amid the equity bullish run that we've seen recently where equities were off 1%
right.
or 1.5%. And everybody was like, okay, here's where they give back ground.
Right.
Similar story with this, especially on a Fed week like we have this week.
But what
short
does
term,
that
plenty
mean?
of two
What does that
plenty
mean
of
to you,
two-sided
Fed
action.
Week wise? Because it's a 2-day meeting. It's what it just means.
Just
Wednesday's the
volatility.
announcement.
Just volatility. To me, it means nothing in terms of my brain is not shifting any gears of like, oh, this is going to happen and then this is going to happen. I just see it as, and we've looked at the data both, internally and externally, public data, everything around these Fed events. There just tends to be volatility.
Now we've had again a big rip up to 115. We're off in euro. Aussie now, Kiwi, the stronger players in the space. Do you see any froth coming off of this going into FOMC, or given the fact that they're not going to cut rates in May, it's really probably the press conference at 1:30 that's going to be more interesting.
Yeah.
And at this point, I don't know what he's going to say of anything of interest.
That's why I say I can't make a story around like, oh, I want to be long going into this or short going into this or what have you. All I can say is that you're getting plenty of these days. I mean, dollar yen again today, 100 points higher or lower before the U.S. session even comes in. And we saw this multiple times last week where already a big move before the U.S. session opens. And then a big move in one direction or the other off of that, and plenty of two-sided action in the short term. Because, Pete, I agree with you. You look at the long term of this chart, and this is the weekly here in the Aussie. You take off this blip here, and just to your point, anything in this 62 to 65 range has been the low that they've bounced off of plenty of times. And there's been plenty of trading in the 65 to 70 range. And even you go back to 2022, which at this point, is 3 years ago, but plenty of 70 plus trading in there. And you look at, I think you make a great point of the velocity that this market can carry in both directions. You see the shakeout of the pandemic, Pete, and then it's a nonstop ripper all the way up to 75 cents, and they touch 80 even a year, not even a year after the pandemic. Here you go from sub 60 cents to above 80 cents for a trading day. It looks like maybe one or two in this weekly chart here. So yes, in the long term can have extreme velocity to the upside. This could be a little bit of the mean reversion finally for a number of these currencies that have been beat up against the US dollar. But in the short term, you're seeing plenty of two-sided trade, even in the equity story. And it's just interesting that the correlation is breaking. So you're getting two sides in a bunch of uncorrelated stuff, which is even better. Yeah,
and we're seeing rotation back into the commodity currencies, which is, again, great to see. And I think that we've covered, in the last 6 months, we've covered a lot of ground.
Yeah.
From up to down, starting now down to up a little bit. Don't get trapped in, we were struggling. 57-cent Kiwi didn't hold like it was supposed to before we traded, sub, what was it, 155 briefly. I think you need to be mindful of, as the market moves here, you keep that context around you of being able to trade both sides of the market. So especially on that shorter term dynamic, use the stats here. We're at net change here is 40 points, 38. I think the one standard deviation is
probably settled
40.
in around there. Yeah,
40. So this is a question of, do you use that or do you use, well, it's 40 from where I start today. That's part of what you can do.
Up to you. Just be consistent.
Absolutely. So I think the consistency of what we've seen here is 5 rollovers of 30 to 40 points here, all of them never reaching the previous low. So when we go back, just if you go forward a little bit, Frankie, right to the front of the chart during May here. Yeah, we've had this move from 59, just in 59, from 59 up to 60 cents roughly.
Yeah.
There's been 20, 30 point pullbacks. They never reach a level of pullback. The low on those pullbacks never gets to be where the old low was on an intraday basis. And the high they put in gets to be a new high. Now I'm not a technician, but that's positive market structure. So you need that to play its hand a little bit. And does that mean I can't sell them up here if I really think they've gone too far, too fast? Sure you can. You just have to be mindful that structure is saying there are buyers out there who are willing to buy smaller dips that don't need to have to be major retracements.
Sure thing. Let's get into the slides really quick.
We got slides.
Yeah,
Should we save them?
We're gonna rip through them. No,
Okay.
it's pretty time sensitive, so we'll rip through
Okay.
them. Let me pull them up really quick, and I might just have a lightning round. Recapping the jobs report coming out in early May, reporting on April, stronger than expected, and huge shifts we're seeing in interest rates here in the U.S. and where they're projected to be by the end of the year. Just to recap, Pete, 177 versus 130. A lot of jittery action around this number, back and forth. Obviously, you've always got revisions, and right now it's a more complicated time than ever in terms of what a strong job market means. Is there still lingering inflation? When will, tariff stuff actually kick in and hurt these employment numbers in the U.S.? So much hedging back and forth that we didn't see too many huge reactions right off the number, Pete, but they were expecting a worse job market here with the trade war turbulence. But they got what has been relatively normal, high 100s, low 200s at the end of the day. And you did, after the shakeout, Pete, see a couple of trends, which was equities continuing higher. They continued to bounce back off of this, and they were on a hell of a run there from the lows in S&Ps around 5,000, even now getting back above 5,600. But another interesting thing I thought, Pete, was that Treasury yields almost across the board were 10 basis points higher after this strong number, which, okay, it makes sense. But you saw some huge shifts here looking at the June rate cut probabilities, because the May, at this point, it was maybe 5 to 10%. Now it's essentially nil. The chances of a rate cut in June now, Pete, are 37%. They were 67% a month ago. And the day before this jobs number were 57%. So that's a huge hit that they take here, going from more likely than not a rate cut in June to now punting further out in time. What do you think about this huge shift?
I think having 3 rate cuts baked in, given the uncertainty, we all kind of lean was a little bit much.
Okay.
Now they're taking a little bit of it out. So it's down to 2.25, 2.5, depending on if you go. Some of what they did here was move them further out into later parts of the year. There's more towards December. So,
and we could take a look here at December, because while this did change, to your point, it only shifted by about 1 rate cut. But that is still, a decent shift. But to your point, you're thinking maybe this distribution was a little bit more vulnerable than people had thought going into, because you might think, oh, it's the non-farm at the start of May. Like, of course, it's an important number, but it's 1 of 12, and like, how meaningful can it be? It took a whole rate cut out of the December projection here.
Now, when I say it's not meaningful, we see right here in the market movement, it definitely drives markets. Long term, I'm not pulling away that I'm changing my expectations on things because what non-farm payrolls tells me. Because the one thing, as I've mentioned before, you look at every previous month's revision and it's dramatically changed. And it's like, we did what on that? Now it's this? So I think what we've done is normalize expectations that there isn't going to, at this moment, be a great need for massive stimulus. And between the tax bill and possible price increases coming down, the Fed's not in a hurry to cut rates. So that was really the case when they had a much more aggressive number put into June. But it was that fear. What they've done is they've baked out a little bit of fear. I think that's actually premature baking out of the fear. So we'll see how that shakes out.
Well, the funny thing is, to your point here, while the U.S. dollar has recovered from its lows, it's not necessarily ripping higher the way that equities have, or that U.S. Treasury rates have, or the way that they're baking out these projections. And you would think that would be relatively one-for-one action, because the U.S. dollar got hit, obviously, on the way down in equities, on the way down in interest rates, and on the way up in these rate cut projection odds. but you're not seeing that U.S. dollar recovery. So to your point, a little bit of hedging. Yes, they're 3% off of the lows in yen, 2% off the lows in euro, but they're still down. U.S. dollar down more than 5%, which is a huge move.
Back and forth, which what we want, but they're holding on to the lower quartile, or depending on how you look at euro, the upper quartile of a big move. So I think, I'm not so quick to move my scalping ranges in all the way to that one standard deviation level yet. I will give myself a little bit more wiggle room. What does that mean? I will miss a couple of things, but I'd rather do that.
Yeah. So we'll see where it goes from here. But yeah, strong U.S. jobs crushing the chances of rate cuts here in early summer and rallying back the stock market a little bit, but U.S. dollar not sold quite yet on the recovery here in the U.S.
We'll see. A lot of BOE coming up, FOMC, as you mentioned. And, of course, a barrage of new tariff agreements are supposed to be announced this week.
Very cool.
Just
All
like
right.
the ones last week. So this will be exciting to see. You know what? Lots of opportunity, lots of back and forth. Stay disciplined. Don't get caught in the past. What I mean is don't get caught that at some point the euro is going to see 107 or 106 again. It may. You and I don't know that. But we're going to accept the terms and structure we have right now, move forward with it.
Live in the moment. Very zen of you. And with that, we'll pass it on to
Tom, Tony, and Vanetta.
There you go. Have a great day, everybody. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok game.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most?